Please, can you all see my screen?
Yes,
Yes.
Mr. Kent, I can see it from here.
Yes,
Okay.
sir.
Yes, sir.
Okay. So I said I'll add internal and external structure plus refinement. So I think I already have something I drew up here. I will redraw it again. So when we say internal and external refinement, let me use an example here. Let me draw an example here. Then before we go directly to the chart, let me draw something here. So let's say this is the chart. Sorry. This is the chart. This is the chart. That's good. So if you understand market structure, just like our last class we had, you understand that the market does not move straight in straight form. It moves in a form of zigzag, just like this: up, down, up, down, up, down, just like demand, supply, demand, supply, demand, supply, demand, supply. So that's how the market works. It does not work straight, or let's say it's buying, then it will just buy straight and be going straight. No, they have to cover some spaces. So when we say internal and external structures, so you see from here to here, this is an external structure because this one is outside. Let's say this was the first structure here, external. This is the external structure here. These have not, let's say this was not printed yet, and this was the first external. And then the retracement back to this point is coming down to the fair value gap. We we uh, we, uh, we in our last class we talked about that, and some of you already know that fair value gap. So this is an external um, structure, and this is an internal. The reason why we call it internal is coming back to fill the gap and also coming back to the order block or demand zone. Then after that, it goes back in order to also break another structure to create another external structure at the top. Then another one internal, external, internal, external. So same as the sell, the one for sell. This is the one for buying position, and this is the one for selling position. This is external. This is internal. It's going back to fill some gap before dropping again. External, internal, external, internal. So the reason why this one is external, because this one need to this chart need to go back to fill this space here, the internal space, in order to come back. And it's also going here to take liquidity and then come back to take this out to make sure this is not equal. It will go back and take this out. So let's go to the chart so that you will understand what I'm saying. Let's move to the chart. I also use, okay, this is gold. The other example I used was in BTC. I think let me still go back to there. We'll still use, or let me use this. Let me use this. We've not used the one on gold before. I've been using BTC for our classes. So let me just use gold today because I just remembered now that I drew all this so that before our class, I'll just go straight to the point. So let me use this. So if you look at this chart here, I explained something similar in BTC chart, which was break of structure and also order block. So this class of today is just like they are almost similar. They are similar, but it's not let me say it's not the same. It's not the same. They are not the same. So in today's class, internal structure plus external, then before refinement. This means that the using this strategy, it will make you to enter in order to know where to target your entry, your stop loss, or your exit point. For you to know your exit point. So this is what you are supposed to use. Okay, if you check here, you will see what I was talking about, which is this. This is let me do it like this. This is your external here. This is your external. This one here. This is your external. You see, after the market dropped down to this place, it went back to take this high out, just in form of break of structure. Same as this point. Same as this point. It came back to this point, dropped down to this point, and then it targets, which is, I call this as the internal structure. This was the internal structure because it came back to fill this gap here. If you look at it very well, you see the gap here. This was the demand area, which was the discount zone. This is the discount. You buy at discount and then sell at premium. Discount zone, then you sell at the premium. That is our um, discount zone, which was this place. So now, if you are targeting this kind of entry, what you should do is to enter.
Please come again. I didn't get you.
I'm still explaining. So what you should do here, um, this is how your entry should be. Although you will still zoom into the lower time frame. This is how your entry should be. You should target the next high, which is this. That is the external structure. External structure at this side. This was the internal because it came back to fill this space here and then go back to break the external. Internal, external. So for you to identify all these kind of internal and external, you can see this V shape here. Created a V shape here, another V shape here, another V shape here. So this is another one. Let me show you. This is another one here. It failed to take out this one at this point. So some people enter thinking it will take this part out. It didn't. This is 1 day time frame. So this was the valid one here because it was not taken out. This point at this point. Let me remove this. This part was not taken out. That time it created this. It was here that particular time. So if you draw this line, you will see that it was taken out. So it came back to this last break of structure here. If you look at it, you will see that there was a break of structure at this point. This fair value gap after breaking this external structure here. So it came back in order to fill that space at this point. The reason why it still dropped down to this place was that this place didn't was not enough for it to move up. It have to come down, still come down to fill partially, to fill this gap partially. So it went back again to remove this external after coming to create another internal here. So this drop was coming to fill here and also creating internal structure. So another way of entry, this is how it should be. Although this a bigger time frame, I will narrow it down. Then you target the last high, which is here. You can see that the market go straight to that point. Straight to that point. This is bigger time frame. Oh. I will also narrow it down so that your stop loss will not be very big like this. You will know where to enter after spotting your internal structure. So I will narrow it down for us to see so that you will not just go to 1 day time frame and then enter. No, the market will take you out because your stop loss will be very, very big. Zooming in into the smaller time frame like 15 minutes, just like uh, the theory I sent to you in the group today. Narrowing into smaller time frame will make you to position your stop loss at the right point. So um, this place was taken out, which is the external. It can take it out as break of structure or sweep of liquidity, which was this. It also went there to take out liquidity at this point. So that's why I started dropping and start doing this kind of reactions here. So for you to enter this, then let's narrow to 4 hours time frame so that you will see it there. I want to make sure that if you are able to spot out all this, it will not be hard for you. If you look carefully at this place, you see that that is what is creating here. It has already created that. You see, this place was taken out. This place is left. So we should be expecting it to take this out, which is here. This place. Because there was break of structure at this point, which is here. Let me zoom in. This point. There was break of structure there at this point. So you can see it has already filled this space here. I think the target should be here. First target, second target, which is here. Second target should be at this point. Let me use this as. So let's narrow down to 15 minutes. Or before we come here, let me use this so that you will see it clearly, because this one is still creating that. This place is still creating the move. So let me use the example of another one which has already been created. Let me use this. This was one of it here. This point. My mouse is misbehaving. This was one. This was another one. At this point, you can still use this one. It depends on how you want your entry to be. And which one? This one. Let me use this one. This one here. So if you look at this in the bigger picture, this, you can use this as the external. This can be used because I want you all to pay attention very well, because if you don't pay attention, you might get lost. My mouse is shaking. Where is this? This point. Because this is where it started at this point. The reason why I'm marking this is because this is where the bullish move started at this point. At this point. So this is how you should expect your entry should be. You enter from this point. This should be your first TP, second TP. So to make things easier, that's why we say don't depend only on one strategy. All this strategy I'm teaching you, anytime you want to take trade, make sure you use or you wait to see a good signals. So if you look here very well, what candlestick did you see there? This one here. I want you all to call it yourself. Let me know if we are together. What candlestick is this?
Pimba.
You say?
Pinba.
No. Who is saying it's pin? Who is saying pinba? I don't think you know what you are saying. Let someone else. You see? I left with
The
them.
doji candle.
Eh?
The doji.
You say?
Doji.
Yeah, that is doji now. I don't know so the person is saying pinba. This is doji. You can also call it evening star. It's a doji candle. This is doji candle. Immediately it filled this place. It created a doji candle here. Then that is when you should be able to know that that is your entry point. That should be your entry point. So this is why I was even marking it. I didn't see it. So that's why it's good that any analysis you are doing, you should be mindful to check the kind of candles they are printing there. That's why it's good to mark your demand zone like this. So immediately, it was immediately I marked this. I have to look carefully. Then I spot this. If I was to take this trade now, then I will say this was my demand area. So after the candlestick tapped into my demand area, what I spotted was a doji candle. From that doji candle, you can still enter from this point, even without narrowing down to your lower time frame, because entering here, this is how it should be. You target here your stop loss. You can move your stop loss a little bit this place. Let it be at the last week of that doji. This is how it should be. Your entry would be immediate. You can enter immediately. If you want to enter aggressively, you can still enter immediately from here. You can see how little your stop loss is, because sometimes that is how I enter after spotting maybe a doji, bullish engulfing, pin bar, after spotting those candles on my demand zone. Because if it is not on your demand zone, if you enter, it will not work. You will enter and the market will still take you up. You target this as your first TP. You can also use the last external high here as your second TP. You use them, you see that you are right. You are still right. This was, if we are to call this was your internal structure. Then you target these two external structure here, which is 1 and 2. So this is how your entries are supposed to be. So I don't know, let me narrow down to 15 minutes time frame so that you see how it looks like. in the 15-minute time frame for you to have a more secure entry. Let's move to that place. Let's see if we can be able to find that place so that you will see exactly how the break of structure happened on the 15-minute time frame before entry. Yeah, I think this is the place. Right. So this is how it looked like in the 15-minute time frame. 15-minute time frame. So if we zoom in like this, it's still going up. This is how it should be. I think this is where I entered from at this point. I think somewhere here. Let's just use somewhere in this place. Or let me still remove this to explain better. So this was your demand zone. I marked from the 4 hours time frame. So if you look here, you will see a break of structure at this point. This point here. Let me remove this. Okay, let me still leave it there. So you can see a break of structure at that point. And I can even see another doji on 15 minutes. So look at another doji here. After this break of structure at this point, although it didn't break perfectly, but since you were already able to spot your demand zone on your 4 hours time frame, your demand zone on your 4 hours time frame, then it's still okay to enter from the 15-minute time frame. You can still enter immediately after the candlestick drop down to this level. So this is another doji candle at this point. So you can still enter from this point and target that high at 4 hours time frame. The first high, external structure. You can also call it external liquidity. Yeah. So you target the external at the 4 hours time frame, just like I said, which is here. You target the last high, which is this, this, and this. So it's very easy to spot all these things. It's very, very easy. So sometimes don't say that you want to target the last high. Market might not get to that point. So that's why it's even better. I've been telling you that you should not be greedy in the market. Take small and then leave the rest. Like even here is okay. This point, entering from here to this point is still okay. So in 15 minutes, I think this is where the entry come in from this point. This point. After the close, this candle close above the doji candle. It closed above. So that was where we enter in the 15-minute time frame to target this external high and also this external second high here. So if you check very well, you will see them. You will see them everywhere in the candle. This is another one here. At this point, you can still use this. After this drop, this was another. After this break, you can still use this place, because this is where the break of structure, or let me say this was where another bullish move started. You can still mark this area in order to wait for your confirmation. So this is another bullish engulfing here, because this candle is very big. This is another confirmation for you. You zoom in to the 15-minute time frame. So after the break of structure on the 15-minute time frame or 5-minute time frame, then you target this swing high at this point. You target this point. So spotting your external structure, it depends on your entry, where you are going to enter from. So I don't know if you have any question left, because we have only less than 1 minute left. Any question? Is there any question? I think that is all. The refinement, it means narrowing down into the smaller time frame in order to take your entry, which I've already explained. So you can use this strategy in any other currency pairs, either